Intrinsic versus digital value. Gold, with its brilliance and weight, has always been a symbol of wealth and power. It is tangible, real, something that can be held in your hands. Since ancient times, gold has been a store of value for its natural scarcity and practical utility, from jewelry to electronic components. But what if we say that a purely digital asset, with no physical form, is challenging this position? Bitcoin, created in 2009, has no body or soul, but it has a revolutionary essence that gives it a unique value. The idea that a line of code protected by cryptography can be worth as much or more than gold is, in itself, a concept that intrigues and defies traditions. Enjoyed this content? Then don't miss out on the other videos on my channel. I'm sure you'll find something that catches your interest. And if you haven't subscribed yet, make sure to hit that subscribe button and turn on notifications. That way, you'll stay updated with all the new content and help the channel grow even more. I'm counting on you. However, what really distinguishes Bitcoin from gold is its programmed scarcity. With a fixed limit of 21 million units, Bitcoin is, in some ways, even rarer than gold. There is no way to mine more Bitcoin after this limit is reached. This digital scarcity, guaranteed by code, is gaining the trust of investors who previously only relied on precious metals. But can Bitcoin really become humanity's new store of value? Or will gold's appeal, with its millennia-old history, prevail? The clash between physical gold and digital gold is one of the most fascinating debates of the modern era. Volatility. When the price of Bitcoin skyrockets or plummets, the tension in the air is palpable. Bitcoin's volatility is a roller coaster ride that leaves investors sometimes euphoric, sometimes panicked. Unlike gold, which has maintained relative stability over the years, Bitcoin can have daily price swings that reach tens of thousands of dollars. This erratic behavior raises a crucial question. Can such a volatile asset really replace gold as a safe haven? This uncertainty fuels both curiosity and skepticism. Gold, known as a safe haven in times of crisis, seems unbeatable in the face of Bitcoin's stormy nature. On the other hand, this volatility can be seen as a reflection of Bitcoin's youth and the cryptocurrency market as a whole. Like any disruptive technology, Bitcoin is still finding its place in the financial world. Over time, some experts believe that its volatility will decrease as more institutional investors enter the market and adoption grows. But until then, the roller coaster of emotions will continue, and every rise and fall in the price of Bitcoin will be watched with watchful eyes by those who believe that this digital asset still has a lot to prove. Institutional adoption. The entry of large financial institutions into the Bitcoin market was like a silent but powerful storm. Companies and banks that, until recently, viewed Bitcoin with skepticism, are now allocating billions of dollars to cryptocurrencies. This not only increased the value of Bitcoin, but also its legitimacy. When financial giants such as Fidelity and JP Morgan start investing in Bitcoin, it sends a clear message. This digital asset is being taken seriously, far beyond the niche of tech enthusiasts. The institutionalization of Bitcoin could be the catalyst it needs to finally establish itself as a store of value. However, this movement also brings a paradigm shift. Once seen as a currency of the rebels, something beyond the reach of the traditional financial system, Bitcoin is now being integrated into it. This generates a new kind of debate. Will institutional adherence dilute the original spirit of Bitcoin, which was conceived as an alternative to the traditional financial system? Or is this new acceptance exactly what it needs to cement itself as the digital gold of the 21st century? The answer to this question could determine the future of not only Bitcoin, but the entire digital economy. Portfolio diversification. Imagine an investor seeking safety in times of economic uncertainty. Traditionally, it would turn to gold, but today, more and more people are considering Bitcoin as an alternative. Portfolio diversification has never been more interesting, and Bitcoin is becoming a key component of this strategy. It is not just a matter of profit potential, but of protection against the economic storms that plague global markets. Bitcoin, with its decentralized nature and censorship resistance, is being seen as a new type of insurance. But can he really deliver on that promise? The concept of using Bitcoin as a hedge against inflation is particularly fascinating. In a world where central banks print money at unprecedented rates, the value of fiat currencies may be diluted, but Bitcoin, with its limited supply, offers a unique protection. This protection, however, comes with risks. Bitcoin's extreme volatility can make it a double-edged sword. It can offer large returns or large losses. It is this duality that makes diversification with Bitcoin such an intriguing and at the same time risky proposition. Each investor needs to consider whether he or she is willing to accept this volatility in exchange for the promise of a hedge against economic uncertainty. Regulatory risks. On the horizon of any disruptive innovation, there is always a cloud of uncertainty, and for Bitcoin, that cloud is regulation. Governments around the world are just beginning to understand and consequently react to the cryptocurrency phenomenon. The rules that are being created or adapted could shape the future of Bitcoin in ways that are still unpredictable. A new law could send Bitcoin's price plummeting or skyrocketing overnight. This potential for regulatory impact is one of the biggest risks for cryptocurrency and, at the same time, one of the biggest sources of fascination. Regulation can both stifle and drive Bitcoin's growth. If governments decide to embrace Bitcoin, creating a favorable legal environment, it could further legitimize the cryptocurrency and open the door to an even greater influx of institutional investors. However, if they choose to regulate it with an iron fist, imposing severe restrictions or even banning its use, Bitcoin could face a difficult scenario. This regulatory uncertainty is like a sword of Damocles, hanging over the head of every Bitcoin investor. And it is exactly this tension that makes the debate over the future of cryptocurrency so electrifying.